moving into today's trading idea, today we make some minor modification to our report as we highlighted what we call that chart of the day on the front page. On the front page, rather we put instead of usual trading idea, we decide to highlight S&P 500 index. So one of the reason why we want to highlight the index because one, we are looking for the much more higher volatility over the past few days, particularly with the high rising geopolitical tension, stronger dollar movement that is actually going to put what we call that potential correction mode, particularly in the S&P 500. So a weaker or the correction in the S&P 500 in general could also what we call that, give some sort of the uh, a drag into a global equity as well. So if you look on the S&P 500, I think since major what we call that reversal move back in October 2022, the index has been pretty much on the uptrend. So usually the pullback occur right between 2 to 3%. So what I mean by pullback is the minor pullback, something like this, often occur within quite limited in terms of 2 to 3%. But occasionally we've seen much more bigger pullback or correction move. So you are seeing one, I think back in what we call that. Sorry. All right, you see one where in November, 5% downside, 8%, 8.2% correction move, 9.07%, and the bigger one we have, I think, since July last year, is about 10% correction move. Beyond that, I think since the low of October 2023, the index did not, I would say, correct more than 5% until recently. So the recent decline saw the S&P 500 drop about 200%, which is close to about 4%. And right now, I think for the first time since November last year, it actually traded below 50-day moving average. So that actually could one of the signal that the index could enter the correction mode. The correction right now we are looking about 10% potential downside risk. So if we calculate the 10% downside risk from the recent high right within 5264, which means the critical resistance now lies within at two key level. One at 4960, which is I think quite near within current level. Another level will be at 4,800, which represent about 8.8% downside risk. So if you look back, you are seeing a resistance right within this similar level, 4,800. Now those resistance turning into a support level. So you also seen what we call that a 200-day moving average coming in within those particular zone, and another will be at Fibonacci at 61.8 level. So a confluence of the support suggests this could be much more a stronger I would say support for the stock, for the index. Regardless, the next possible major support should be at 4,500 region, which is actually the high of the July last year, which turned into a what we call that major support level. As for now, we think the downside could be kept given the long-term bias remain on the upward. So any reversal move within the level that I mentioned could be indication for the re-accumulation level. Now, if you look on the bottom panel, there are what we call VIX index. So VIX index for the first time, I think since back in October 2022, has broken above their long-term downtrend line. So this actually reaction tell you that the volatility is on the rise, particularly over the past few days. So we're expecting the higher volatility to persist. So for now, we're expecting the correction toward those two level that we highlighted, 4960 and 4008. So re-accumulation again is possible pending what we call a stronger reversal signal. Now moving into today's trading idea, we decide to opt for another low volatility stock, low volatility based on quant style, and scoring also high at 9.00 for both. The first one will be IHH. So if you look on the stock price movement, it's going to be pretty compact in terms of the trend movement, but the trend structure was quite intact in terms of the trend. Trends remain uptrend back in since October 2022. We are seeing a new higher structure above the 200-day moving average, and we think current level still deemed attractive for accumulation given the decent risk to reward ratio. 3.5% downside risk versus 10.7 potential upside. Granted, this is big cap stock, going to be much more slower in terms of overall movement, but low beta. Low beta mean if the market do a correction, the stock have a decent chance to holding well into their current uptrend movement. So the next resistance will be 6.38 and another will be 6.75. Cut loss will be below 5.88. Another stock will be time.com. So time.com long-term trend is pretty much intact. You see in the stock continue to rise above the red line here, represented by 200-day moving average. Those lines have been tested number of times for the past few weeks, but as you can see here, is remain traded above those lines. So that means long-term uptrend is still pretty much intact. We like the idea how the stock rebounded off within this 200-day moving average at least twice since February, and this actually creating a new and stronger high-low structure. So long-term trend remain on the upside. Yesterday again has seen the stock forming something that we call a variation of the Morningstar pattern, and with the uptick in both RSI and MACD, we expecting the current uptrend to continue. A risk to reward ratio also attractive, which 3.75 downside risk, which is below at 5 ringgit, and the net resistance will be at 5 ringgit 45 cent and 5 ringgit 80 cent, giving you 1 to 3 risk to reward ratio, 3.75% downside risk and 11.5% upside potential.